But on that note, next move on to our next fundamental guest for the show. We have Anirudh Garg of Investset PMS. Anirudh, good morning. So good to have you on the show.
Good morning. Thank you for having me. It's a pleasure.
Anirudh, let me start off with the big headline for today because we have the negative surprise on Q2 GDP numbers. So what does it mean for the Indian equities going on?
I think we are very clear on it. Negative GDP numbers, though may act as a surprise, but it is positive for the economy. Why? Because it compels the government to take actions that were long due. Now we have election year over and the government is clear. We have the majority in the two major states. Now I believe the path is very ripe for the government to take the capex action that they had stalled for some time. And this negative GDP numbers act as I think, a catalyst for the government to do so. So, for the long run, the next 2 years, from whenever these numbers have been bad, barring some global turmoil, if it happens, though we believe that the global turmoil has also happened a lot in the past couple of years, and with coming of President Trump, there needs to be a little bit settlement down on the war fronts in various places that are going on. I believe that we are setting up a base now for another rally, though it may take some time, it may take some consolidation in between, it may take some sector rejigging, but yes, I do not take GDP numbers as a very negative for the economy. In fact, we take it as a positive, as we believe that the government's role will increase as a spender.
Okay. Anirudh, but what does it mean for the FIIs? Because we're seeing the slowest pace of economic growth in nearly 2 years. So what does it mean for the FIIs who are looking at India out of the emerging markets pack?
We believe that the markets are very, very future discounting. These numbers are out today, but FIIs, owing to the amazing teams and intelligent minds they have, they knew these numbers, from the past 6 months since the FII selling increased. So, what happens is generally when a news comes, we feel that this news is only known to us and we take decisions in our investment portfolio accordingly, rather than we should take that this news is already discounted in the market and we may see FII buying returning soon. So I'm very positive on how the FIIs will react from here on for the next couple of years. We can leave another three months till the budget in between. There may be some ups and downs in between, but yes, we are now in the process of setting up a base.
Okay, all right. Anirudh, then how do you expect the RBI to move in the upcoming monetary policy meeting? We have this week itself coming out with its policy outcome. How do we expect? Do we expect the repo rates to remain unchanged, or should we take a hint of certain liquidity easing measures that the RBI could come out with?
No, I do not see repo rates, I do not see a cut going through. Firstly, the Indian economy has to stabilize a bit. The government capex has to increase because this government is very, very critical on the US dollar versus the Indian rupee. And as the US dollar is becoming stronger, as the US economy is becoming stronger, as the President Trump's focus on the US economy increases, and money, in the long run, relatively money is flowing to the US and the dollar is becoming stronger by the day. And Indian government, which is a net importer of, I believe, everything, cannot focus or cannot lose the sight of the US dollar, the Indian rupee becoming weaker than the comparatively to the US dollar. So yes, if they do a rate cut right now, surely the Indian rupee becomes weaker, and somewhere the the Modi government is very, very conscious of that. Yeah, as soon as we see some stability arising in the Indian GDP numbers, which we believe that should start from Q1 of next year. So we believe that is where we can expect a rate cut going forward. Not right now, we believe.
Okay, Q1 is when you expect a rate cut to happen. But Anirudh, you talked about strengthening dollar and the Trump's policies which might be coming into effect from next month onwards. So what does it mean for the Indian equities? Do we expect further downside from here on because of the strengthening bond deals as well as the US dollar index? Or do we expect that most of the sell-off has already been done and we can see some moderation of correction from here on?
So we have to divide it into two parts. If we look at at the longer term. By longer term, I mean 2 years. If we look at the next 2 years, we believe that the Indian equities are a good play. Why? Because we will see the Indian growth returning, and the companies which are doing pretty well in India, the new age businesses that are doing well in India, they should continue to flourish. And as we see government capex also returning, so we may see a take back in the government capex companies because they have corrected a lot in the past 3 to 6 months. When it comes to the short term, if we are looking at the next 3 to 4 months, we believe that in the last month when the Adani saga happened, Indian markets have, on a bad news, made a firm base, and from there, a good retracement is due. Will a bull run continue from here? We believe it is a little difficult owing to the technical nature of the markets. Our technical team suggests that a new bull run is not on the cards right now, and we may see further correction to 22,000 levels from here. So yes, there may be a short-term pain, but yes, this was a very good opportunity to add. And you cannot find the bottoms or tops in the markets. So any decline in the Indian markets for the next 2 to 3 years, for the next 2 to 3 months, are a buy with a perspective to hold for the next 2 to 3 years. And very good money will be made in Indian equities. Yeah, the only point is do not go in for those companies which are trading at exuberant valuations, because they may be extraordinary businesses, but somewhere the stock prices are also exuberant. And whenever you buy something at exuberance, whenever you don't buy value, then expectation from the market is wrong. Also, I believe somewhere because of the bull run that has come in the last 2 years, the amazing bull run India has seen, we have seen amazing CAGRs coming at various mid caps and small caps fund. Somewhere I believe that the Indian public is overexposed to the equity markets. If you're not leveraged, you have a horizon of 2 to 3 years. Indian markets are a buy. Every dip is a buy.
Every dip is a buy. But at the current juncture, how are you finding the valuations? Because we have seen quite a bit of a sell-off from the September highs as well. So do you think that the valuations have become attractive at the current juncture?
I believe they are getting into that zone. They are becoming attractive by the day. But we have not seen a very, very amazing fall. We have seen a fall of around 10% in the Nifty, which is a very good fall. Nifty, I believe, does not have a downfall of more than, say, 18 to 20%. The way it is made today, the way it is structured between IT, pharma, and other sectors. So I do not believe the Nifty has a fall of more, a chance of fall of more than 18 to 20%, because we are nowhere at the end of the bull run. That's very, very sure. The valuations have not reached those levels where we see that the current structural bull run that is going on in the Indian markets may collapse. But yeah, there are growth concerns, and these are the concerns that lead to capitulation in the market. And somewhere, whenever there is blood on the street, which may come in the next couple of months, I believe so, because at 22,000, it's easy said than done. If it comes, it will be a very, very good buying opportunity. But I as an investor, do not believe in, timing the markets. We believe that dips are there, dips are coming. We are currently, say, around 33% cash. So we'll be deploying that cash whenever opportunities come in the market. And yes, they will come. Indian markets are very, very strong. The fundamentals of India are very, very strong. It's just the time not to be leveraged right now, because somewhere when people are leveraged, which I'm seeing in the market, there comes a capitulation where this leverage has to be cut due to various concerns, with a short of margin, and general fear that prevails there, the bad news that comes with capitulation. And somewhere I believe that, except if you are not leveraged, if you are doing your SIPs, continue doing your SIPs, increase your SIPs on negative news. That is where, like the current news, the GDP number, it is actually a very, very good news, because the government, as I told you, is now they don't have an option. They have to make sure that things get better, and that is how, when central banks and all take decisions which were not expected. That is what happened in COVID. That is what happened post the Russia-Ukraine war. Whenever the growth comes down is when the government acts as big brother and comes in and steps in, and then the cycle starts again. So it's all right for India, and India will have its own course. I don't believe India is a very, very small market. It does not have a lot of comparison with the US. It's just that whenever we have a fall, believe that the money is flowing to the US, and money that from India will go to the US won't be a lot in terms of your US market size or Chinese market size. So we have to focus on our growth and uh, just look at market valuations from time to time.
Okay, all right. Anirudh, now that we are standing on the last month of the third quarter also, we'll have the companies which are reporting their Q3 numbers from January onwards. So what is your expectation from the India Inc. this time? Because we saw quite a disappointing second quarter.
Yeah, see, this quarter was very, very disappointing. And again, as I tell you, maybe it's our view of our style of viewing it like this. The more the disappointing the numbers, the better is the chance of a recovery. The better is the chance of getting back on course. You know, as they say, whenever you falter, then only you check your facts right. It happens from in equity markets all over the world from time to time, and I believe that since this news has now come and it is a reality now. From here, the for the next 2 years, the growth should not be that big a problem.
Okay. So the
Yeah.
growth should not be a bigger problem. But any sectors that you find attractive after the recent sell-off and after the Q2 earnings also came out? Any sectors that you found stand out despite the overall consensus of a disappointing second quarter performance?
See, the only problem that I see right now in the Indian equity markets is the private capex, which we have been waiting for ages, is not coming. Yeah. So that private capex, I believe we all had a lot of hopes on, and it's a reality that it is not coming. It will come. It will come is what everybody is saying from ages. We have been an advocate of it because we believe that after government has done so much, it is now the duty of the private sector to now step in because actually the government is doing a lot. If we see various paths, so I think the only focus now remains on is new age companies, public sector capex because they have corrected a lot. Valuations are again getting better. Uh, One concern that I have is, which nobody is talking about, if I analyze the Maharashtra elections, I believe it is that 1500 rupees that has helped the BJP government a lot in securing the position that they've scored. They've done a marvelous job, but I believe a major role is played by the stops that we are giving. If those stops, the trend stops, it stops with a buck here, it's all right. If it continues or increases, the public sector capex that is there might also take a hit. I'm very confident that it should not happen, but who knows? It is very difficult to predict politics and how things will move on. But yes, real estate, I believe, is doing good. Anything which is in the luxury segment, people have earned a lot of money in the last 2 years. So luxury share segments should do well. Your companies like Zomato, though the valuations are the little exuberant, but the business models are very, very good. Uh, so all these new age sector companies, private sector, public sector capex companies, real estate companies, I believe will be the flavor going forward. It's just that you have to just weather this storm that is there in the Indian market for sometimes. Has the storm passed? I do not believe so. I still believe that there is some room left for a correction in which there will be a lot of destruction in the mid and small cap space.
Okay, some destruction expected from the mid and small cap space. But all right, we have to let you go, Anirudh. Thank you so much for your time. We hope that we connect with you soon as well.
The pleasure is all mine. Thank you.